Well, welcome to another episode of Insurance Gone Wild. I'm your host, Dennis Settlemeyer. And once again, my lovely co-host is...
Stephanie Lencioni.
Lencioni. We have... whoa. That's a little different.
I know, right?
Wow. We can see ourselves in the monitor. And we're actually setting...
We've switched places.
We switched places today.
We did.
But, yeah, that kind of threw me off a little bit. That's kind of cool.
You're just so ruggedly handsome, you can't get enough of yourself. Yeah. I like it.
Right. No, I just, yeah. No, that's kind of cool.
Now you can see, so I like this because you can finally be able to tell, like, are you having a bad hair day? And then you can fix it.
I always have a bad hair day.
You know what? That is one thing. We should have comments and like be nice, folks, because I'm a person with feelings, but damn, I look at some of these things and I'm like, my hair is awful. If only I had a mirror and I could have been like,
I think we should fire our makeup artist and start all over again.
We should. She is terrible. She's
Yeah.
terrible.
She's not doing a very good job.
She's not.
So.
To be fair, I don't pay her much.
Well, that's true.
Yeah.
That's true. So, all right. So we're going to talk once again about health insurance because 'tis the season. Or coming up, right? It's coming up very, very rapidly. Lots of changes that are happening. This is on the individual plans, but also there's some group. This is a lot of the time of the year. Usually the last quarter of the year is when the group insurance starts kind of coming into the picture. Mm-hmm. And a lot of you people that are watching may have a group health that is renewing this month or next month or maybe right after the first of the year sometime. But we are in the season, health insurance. Do you have any idea? And this isn't a stump the chump question.
Okay.
This is not. This is a real question. Why is it that I'm going to pick on group for a minute because that's might be my experience. Why is it that group health has been historically sort of the last quarter of the year, not necessarily for starting? Why is it not January 1 or something? Was there a law passed or something that caused?
So typically your open enrollment is going to be, like for the companies, the open enrollment is November sometime, and sometimes it's like early December. That's the cutoff. But it's usually like November that people have to make their decision. The employees have to make their enrollment options.
No. My history has been that usually the new policy starts in October. That's been historically Now, I don't sell health insurance. I'm about just from a personal experience that the group generally started the last quarter of the year, and you had to pick in August or September what it is you were going to do. And I didn't know if it was like when a law got passed that time of year or what.
At that point, it's probably just a grandfathered from the time they said, oh man, I think we're going to start offering benefits. Yeah. And then they got it as soon as they could, which was a 10-1. And then from there, it just continued to grandfather into rollover like 10-1, 10-1, 10-1,
All right.
10-1.
Well, I understand the individual because that
the individual is
the Obamacare type thing.
That's 100% mandated.
The date.
So now, yes. So that is where you can start a plan 10-1 with Obamacare, the healthcare.gov, assuming you've got a special enrollment qualification. Mm-hmm. But regardless, so you start that brand new policy and you have that $9,100 deductible. That's between 10-1 and 12/31 of that year. So you've got 3 months to hopefully not have anything happen to you. Because regardless, beginning of the year, the deductible is going to start over on the healthcare.gov. But with the other thing, so I think historically why January 1st is so... what do you call it? I guess popular. A lot of people have in their head like, oh, end of the year, you have to get your stuff in, end of the year. Oh, it's a new year. So we're going to, because we get really big, like July 1st is really big. September 1st for us is really big. And then 12-1 and 1-1. 12-1 is a bizarre one to me. And it happens and that's fine. But it's because for the smaller groups, they're thinking about it. And they're like, oh, well, hell, I guess I don't have to wait another month before I get coverage because anything can happen. And, so like might as well just start
tax
it.
Deduction this year and move on.
And so then they start it. And then you got it. All of a sudden you got a 12-1 effective date.
Yeah.
So
I don't know. I find it interesting, the timing of it. I don't know why, but it just
I think,
I'm a nerd.
Yeah, and maybe it's, hey, if it's a bigger company, maybe it was like a merger and acquisition type thing. And then they decided, oh my gosh, we didn't have great benefits. This company that we acquired didn't have great benefits. We just need to completely start over, reset. And it happens to be
probably some agent come in there and convinced them to reset.
I know. And her name is Stephanie Lencioni. No. So to your point, commercial, your employee benefits, group sponsored benefits, it could literally, open enrollment could be at any point in time.
Oh, of course. Yeah.
Any point in time. And you could go with one company and they have a 1/1 effective date. You move over to another company and they start in April. Mm-hmm. And then individual again, different. Yeah. Well, the effective date could be whenever, but the end date is very concrete when it comes to healthcare.gov. Yep. So speaking of dates, we are coming up on open enrollment because that is a season where you do not have to have any qualifying event. It is just you go on. If you want this coverage, you can enroll and blah, blah, blah. That is November 1st to December 15th. You have to solidify your election for the year. That will give you coverage on January 1st. If you enroll December 16th, your plan will then be effective February 1st.
Okay.
And then the last deadline is you've got until January 15th.
Okay.
And then after that, you're going to need a qualifying event.
So 11/1 to 12/15.
For a 1/1 effective date.
So you have about 45 days to make a decision if you want to have a January 1 effective date.
Yep.
For the individual insurance.
For healthcare.gov.
Yeah.
Yep. And then at that point, and here's what's nice with most people having their stuff align at the end of the year, whether it's the group or individual or whatever it is. Because I will say, you being the employee, if you're an employee with a company who, especially a smaller company, and they offer benefits, chances are you're going to have decent coverage for the employee. Mm-hmm. But if you're working for a smaller company, not Apple, not Google, not Amazon, Microsoft, all of those, they may not have really good coverage. The coverage for your dependents may be garbage because the company they don't have to pay anything for that. Mm-hmm. So that's when, great, review everything. What does this look like? Are there other options out there? We do that all the time. We review other people's plans like, hey, send me what you've got, what's being offered through the company. Let me take a look at what we can do for you over here. And then we'll just see which one makes the most sense. And from there, you make the decision. There are going to be pros and cons with everything. You and I had a conversation earlier. What is any insurance policy perfect? Mm-mm. No. None. Zero. It does not exist.
No, and
there's some good ones.
The definition of perfect varies from individual to individual too.
Correct.
But even if you had if you had 10 people agree, yeah, that's the perfect plan, there's no such thing as a perfect plan. It's not going to pay for every little thing.
Not going to pay for every little thing. And then to your point too, yeah, like perfect is different. It's a subjective term, right? Yep. So, but that's what we do. And so we've done that a lot where, hey, employee is going to stay on and then we're able to move dependents off. So yes, we've split them up, but again, if it makes financial sense with coverage sense, then do it. There's nothing wrong with that, but don't just feel like you're being crammed into a corner and you have to spend the extra $800 a month to cover your family when you may be able to do it cheaper elsewhere. Mm-hmm. So that's why we just encourage Call a professional, have them look through all of the information, and somebody who knows how to look through all of the information.
Yeah, and
not someone with just one peg and one freaking bullet in the chamber.
Here's the thing: in lots of cases now, if you have, I'm going to compare. This is going to be one of those. I'm going to take the long road. Okay, so give me just a second, but not too long.
No, I'm just kidding. That's fine.
let's say you have an older home. Your health insurance premium could literally be more than your mortgage payment.
100%.
Yeah.
Oh, yeah. And that's not hard to do.
And because we live in an older home, and compared to everybody else, our mortgage payment's really small.
Right.
Compared to everybody else in this area. But it would not take much for our healthcare premium to be twice as much as our homeowner's premium. So why not shop it?
Yeah.
At least talk to somebody about it. Don't just accept it.
Yeah.
It doesn't hurt to talk. It's not like they run a report and it's, oh, you're shopping, so we're going to jack this rate up. That's not the way that it works. Just talk to somebody, see what can be done. You might find something better for less money.
Yeah.
It's possible, because one of the things that I've learned is that when you go in, especially on groups, but I don't know how it is on individuals, but especially on groups, you go in and you say, I want quotes for company A, company B, company C for this prospect. Well, it gives you quote after quote, all these different plans. If you don't choose the right thing, it'd give you a list. Let's say Aetna gives you a list of quotes for different plans and different coverages and things. That's the way it used to do anyway. I don't know if it still does that, but it may give you 10 or 15, and then you had to go through and pick out which one you wanted.
You're talking about on healthcare.gov?
No, on for group policies.
Yeah. I mean, I've got to go into each carrier.
Well, exactly. Each carrier may give you a number of different.
Oh, for sure. Oh, yeah.
A number of different
quotes.
You
have like 100 different.
Too many options. So
too many.
You as the agent have to go in and say, well, I'm not presenting all 100 from Aetna, all 100 from Blue Cross Blue Shield, all 100 from. I'm going to pick the top 2 or 3 based on what I know that they want, because you've already asked questions. What are they looking for? And then you present it. But next year, what they're looking for might change. They
Correct.
might say, hey, well, listen, we're willing to spend a little more on the employer side, or we need to spend a little less on the employer side. And that tells you, well, let me look at some different plans based on, well, how do you want your drugs to be covered and those sort of things. Now, healthcare.gov will give you X number of plans, but it's not an overwhelming amount like it is on the group side.
I mean, it gives you all, I mean, you may have, depending on where you live and what county, you may have 4 or 5 pages that you have to tab through.
Yeah, but you can filter it down.
You can filter, absolutely. You know, it's so funny when you say that, like the 100 plans, like you don't just send that to the client. Mm-hmm.
But some agents do.
Oh my God. I was working with a client at one point, a prospect, and I was like, they're like, well, we already got a quote from United Healthcare, but I'm having a really hard time reading it. And I was like, oh, okay, well, just send me over what you got and blah, blah, blah. This agent.
Pages.
102 pages worth of, I mean, it was every single summary of benefit. It was every single, it was overwhelming for me to read. And I know how to read that, but I'm like, I'm completely thrown away that you even have what? And it was crazy. So yeah, no, people do that.
This should have been an easy win.
It was their client. It's fine. Yeah.
Should have been an easy win.
Absolutely,
they just somebody to walk them through.
We're there even with United Healthcare. That's totally fine. And then to your point, you said something else where it's like, hey, needs can change and everything else. And that's true. We've got a client where they're like, okay, I know we were trying to go cheaper, premium, everything else, but our prescriptions are just so high, and we need a gold tier where we're just getting better prescription coverage. It's not even so much the doctor visits, or a deductible, but it's the prescription coverage. And I was like, okay, great. Well, then we have this is this. So they bumped up their monthly premium, and overall, just because of the types of prescriptions and how many the family has, their overall cost went down.
Yeah.
And so it's the conversation.
So what if maybe you're paying for yourself and spouse and kids. You only have one kid. That kid ends up becoming of age, can't be on your policy anymore, right?
Okay.
And now it's just you and the spouse, but your premium went down because now it's just you and the spouse, not you, the spouse, and the kids. That doesn't mean you need to stay with the same company, or maybe you stay with the same company, not the same plan, because you might be able to get it even less expensive by just switching plans.
True. Well, and there may have been a reason. Maybe the kid played sports, so you're like, we got to keep that deductible low just in case, and the extra pocket just in case we break an arm or do whatever. That's great.
Yeah.
So yeah, no, I mean, to your point, any sort of life event change like that, turning 26 isn't necessarily a life. I mean, it is a life event at that point. It's a birthday, but it ages them off, so it changes the dynamic of the plan.
Correct.
And that's obviously geared toward families. It's kind of an individual conversation. Now, maybe that those are business owners and they're able to get a group plan and have a lot more flexibility with what they want to pay. I got in touch with somebody earlier this week. They've just got 4 employees. It's a family run thing. And it's kind of the same thing. So it's just real small, very family geared, opposed to, hey, we've got 50 employees. Well, we're having less of the conversation about specific deductible coverages or prescription coverages and you know what I mean? Like just a different conversation. But for the people who are employees who have to review their plan, I'm telling you right now, I just feel it in my little gutty poo. The changes are going to be fairly significant. So for employees, even for employers who have historically contributed a huge amount. So even if they pull back just a little bit on what their contribution level is going to be, it's still going to financially impact the household and the family. And maybe they're not adjusting maybe they're not adjusting what the employee is getting contributed for, right? How they're getting covered. So if company A is saying, hey, we're going to pay 90% of employee coverage, and they were paying 80% of dependents, but now like tariffs are really throwing people off. People's orders it's just, there's a lot going on right now. People are a little bit unsure of what's going to happen for 2026. You're looking at me. Are you following any of this? Are you agreeing with this? Are you not agreeing with this?
I don't know that I agree with you. I just don't know where you're going with it, but I'm following you.
I just know budgets are tightening based on what I've heard from some bigger companies, especially in certain industries, right? In some industries, it doesn't matter and they're not being affected.
The industry, yeah.
But if it's like a manufacturing, if we've got any sort of thing like that, people are paying attention. But like in manufacturing industries, things like that, the budget is tightening. So they may not change anything having to do with the employee, but they may say, hey, instead of 80% coverage for dependents, we're actually going to have to bump that down and do 70. Well, that 10% on the dependent coverage
is huge.
Is huge savings for them. It may be, I'm going to make up numbers right now because I don't have all the things. Let's say $200 a month per household that the company is saving, but they have 1,500 employees.
Well, let's just say 50 employees.
Well, sure.
50 times 200 is how much? 10,000 a month.
A month.
120,000 a year.
And that's for a smaller company. And then, and then you go on the larger scale and you've got 1,500, 2,000. I mean, it is a massive amount of savings for them. But then it's an extra 200 on the employee. Just pay attention to what's going to be deducted out of your paycheck. And then as you're reviewing, call somebody else who can potentially give you other options. And it may still be the best option. I mean, it may absolutely be
the best thing to call is 817-753-0093.
I love that.
That's a shameless plug right there.
Well, shameless my eye. Nah, we're good, baby. So anyway, that's kind of maybe a long-winded way of just saying. I think there's going to be an impact to contribution levels moving forward for 2026.
Well, I think the whole last 15,
for the new year, maybe we can cut out
the whole last 15 to at least 15 minutes is just examples of things that could be changing in somebody's life, circumstances.
Correct.
So why not talk to someone about, hey, do I have health insurance options? And it doesn't hurt anything. Like I said, it doesn't hurt anything to shop.
Yeah, to ask questions.
Yeah.
It is
and that's what I mean by shop. It may not even you go get quotes. It may just be you talk to somebody that knows their stuff and they go, yeah, stay where you're at.
Yeah. And we've done that plenty of times. I mean, there are plenty of times, especially.
If you got a company paying 90% and you've got a $15 copay, and your monthly payment is not that bad, stay where you're at. But if your monthly payment's, $3,000 or $4,000 a month, maybe there's something we can do here to help offset that.
Probably a phone call you can make. Yeah.
Yeah.
Even $1,200. I mean, there are plenty of people who they've got themselves, they have their family, and they're paying $1,200 a month.
I need to call my agent and find out what's going on.
Yeah. I don't know how to respond to that.
Yeah.
But she may be busy. I'd probably text and then not expect a phone call. So
yeah, it's things are changing. And I think that we're going to see some big changes with the subsidies this next year. We've got a bunch of saber rattling going on at the top level with the politicians. I don't know if saber rattling is the right word, but you get what I'm saying. They're blaming each other for things. Who the heck knows what the truth is? I haven't read this particular bill that they're wanting to, the latest thing they're wanting to pass, but who's telling the truth? Who's not telling the truth? I don't know, because we're all manipulated at that level. It's all about manipulation, but
I just think at this point, it doesn't really matter how we got here. It is what it is.
We're here.
So it is what it is. This is what it is.
Yeah, we're here.
The answers will be given November 1st. We'll be able to see what that looks like and how people are affected. And then you just have to move forward.
Well, we'll really know come 2027 when those tax bills start hitting.
Oh, well, I guess I was specifically talking about insurance.
What I mean by that is those subsidies. How are they really going to be working out for 2026?
Well, I don't think there are going to be as many people who have to worry about it and not as significantly. They've been pretty generous the last couple of years. They tightened up a little bit for this year. Like last year was nuts. People were like, why don't I have to pay anything? I'm like, I don't know. Because it's crazy. Because they want you to be dependent on the government. But that's all I'm going to say on that.
Yeah.
Anyway.
All right. Well, we are.
I guess we're at time. It doesn't.
We're out of time.
Yeah. I mean, we don't have to talk just to talk.
No.
Although we could.
We're good at that.
We are.
Just ask it when we get together with our accountant.
Jeez.
She's like, you guys ever going to get anything done?
You know what? I think we got a lot done last week at our meeting with the accountant.
Yeah.
Yeah.
So.
And accountants are scary. Like if anyone's seen the Ben Affleck movie, The Accountant, we have one similar to that.
Yeah.
she'll mess you up in a heartbeat, man. Like I don't play around with her. She'll mess you up.
Oh man. But all right. Well, I tell you what, thank you all for joining us. If you have questions or comments, I'm not sure which, I'm sitting in a different area. Which one am I looking? Oh, there's one over there. I've never sat over here before. All right. So questions, comments, remarks, feel free to hit us up on YouTube, leave some comments on videos, or give us a call, 817-753-0093. Email us to contact@igwpodcast.com. And hope you all have a great day, and we look forward to seeing you again soon.